Hey guys, this is Chance Casey with Chance Casey Real Estate Group, and today I want to talk about 8 tips that you should probably know before you get into transactions so that you don't screw it up along the way. So these are things that you should not do during the process to make sure that you don't screw it up. So let's start with number 1 is change jobs or quit. I've actually had 2 clients during their process of purchasing a home either quit their job because they didn't like it or change their jobs to like a self-employed or something like that, and it totally just trying to get them financing in overdrive, and we had to be creative while doing it. So number 2 is make large purchases. If you're gonna put if you're gonna go out and buy a washer, a dryer, or a refrigerator, a car, to go with the new house, like a Tesla or something, just wait until you've closed on the house. That way it doesn't show up in your credit as a liability or like debt, so that your debt to income ratio doesn't get screwed up. Don't change hours or take unpaid time off. The lender is going to essentially take your last 2 to 3 months of W-2s, and if they show that you're not making the average of what's kind of guaranteed to you, that can actually cause a problem throughout the process, and you just don't want that happening to you. I've actually had a client, so this is number 4, I've had a client show up with Mattress Money. They came to closing and they wanted to give the title company like $10,000 that was in a shoebox that they found in their grandma's house. And unfortunately, that's just not allowed because the lender has to have seasoned funds, or they have to be able to source where the money came from, so that, you don't get flagged for, having a ridiculous amount of money in that instance. So if you are gonna do that, just season it, put it into your bank account like 90 days before you do a transaction. Talk to a lender about it, is actually the best thing that you can do, just to verify that, while you go through the process, that's not going to cause any red flags, like big ones. So running your credit multiple times. You can run your credit multiple times while you're shopping for a rate. Typically you want to do this within like a 15 or 30-day period, because what I've heard from lenders, and I'm not a lender myself, but what I've heard from lenders is that you can run it. Equifax, Experian, and TransUnion all have different time periods that where running credit multiple times could actually affect it in a negative way. So typically you want to do this within like a 2-week period. However, you also want to talk to a licensed lender about what those time periods can be. And you typically will have that pre-qualification from when you ran your credit for about 60 days. So another thing, number 6 is overusing credit cards. You definitely don't want to overuse credit cards at the time period that you're under contract, because this can affect your debt to income ratio negatively, and it can actually hit your score down a lot. I've seen in the past where, a person had their credit card at 30% or lower, and that was great for them getting pre-qualified, and then all of a sudden they went out and bought a bunch of stuff, or stuff for them moving and whatnot, and they put it all on their credit card. And the lender checks those things as you go through the process, and unfortunately it made it look like they had just a ridiculous amount of debt, and it didn't make sense for the lender to provide them that loan. So they fixed it, they paid it off, and we got everything closed, but it can cause some problems, so you just don't want to do that. Another thing is co-signing on a loan, any type of loan. So it's a car, a car payment, I don't know any others really besides maybe a house or something like that you'd be co-signing on for maybe a friend or a family member, but you typically just want to stay out of it because it does increase your debts, and that will affect your debt to income ratio as well. And last but not least is going on vacation at closing. You have to actually be there in person. There are some title companies nowadays that will do electronic signing due to the whole COVID experience that we've been having. However, I've had people that have gone to Mexico for 2 weeks around the closing period, and we told them not to do it, but they went anyways. And we can always get you like signed early and stuff like that, or we can find you a title company that is going to do electronic signatures if we have to, but you typically want to be there because the title company requires a valid form of ID in the state of Arizona in order to actually close on the home. Not an Arizona ID, but you just have to actually be there, or you have to do what's called a mobile notary, where they send you an actual notary to the state that you're in or wherever you're at on vacation. So typically not out of the country though. So thanks for listening to these 8 tips about what not to do when buying a home, so that you don't mess the transaction up or cause undue stress. Again, thank you so much. This is Chance Casey. Give me a call if you have any additional questions about buying a home, so that I can help you out. Thank you.